So I'm Bill Evans and I lead Rock Health. I'm the CEO and managing director. And I am really incredibly proud and happy to be the leader of Rock Health. Leading this company is for me the apex of a career. There's no other way that I know to have a bigger impact on healthcare and human health and well-being. So I'm really excited to talk today about digital health, telemedicine in a time of turmoil. And we as Rock Health think a great deal about the market for digital health from the investment point of view. And so what I'll be doing is sharing a little bit of industry context around digital health as a whole and how the investment market and venture finance, particularly for digital health companies, relates to telemedicine right now. So there are a couple of factors affecting the market for telemedicine that relate to the marketplace as a whole right now. I think everyone's aware of the headwinds that digital health as a whole is facing in the teeth of an economic recession, uncertainty created by COVID-19, and then the traditional healthcare sales cycle is not getting faster as a consequence of the first two. It's also slowing down and impacted by these first two factors. Several trends though have emerged in this pandemic that many folks who are watching this are already aware of in some level, but there are really three things that we see affecting positively momentum for digital solutions in this time. There's first and foremost greater engagement with digital solutions. Second, there's a change in the reimbursement environment. And third, there's a regulatory tailwind that's supporting acceleration and adoption of digital health. So what I'm going to show you next is really a set of information about what's happening in the face of these forces, tailwinds and headwinds together. Digital health funding is a way of setting context, and meaning the amount of venture capital finance that's flowing into digital health as a whole for what we're talking about here in this conference in telemedicine. And I'll start by saying, even though you can see in this graph that 2020, the trend line is above the trend line for prior years of investment, going all the way back to 2016. We didn't predict that. Rock Health publishes market and industry insights and data on a regular basis. And when we ended 2019, if you're keeping track of the things that I myself said, we thought 2020 was going to be a flat or down year just based on the business cycle itself. And really in January and February, things were playing out that way. March and April were significantly down due to the COVID impact on the investing marketplace as a whole. But what we saw is a real resurgence in investment in May and June that put this first half of this year at a record-setting pace. So that record-setting pace for investment, you can see here, means that about $5.5 billion almost dollars have been invested in digital health companies writ large. Now that covers more than telemedicine, but within this group are a number of telemedicine plays and trends that I want to get to in just a minute. But this hopefully sets context and shows a bit about what we're seeing. So there have been 214 deals done in the first half of this year as well, which is above trend. So not only are there more dollars, but investors are doing more work. Think of the number of deals as a proxy for how active investors are in a sector. And finally, you can see in the gray circle on the bottom here, the average deal size is at a record as well. So there are more larger deals getting done. And so what we're seeing here, just beneath that surface trend, is that there's more activity in a couple of areas and bigger deals being done in other stages, I should say. So at the early stage, you can see the lightest green bar there, the proportional size of each segment of this bar. In the bottom left-hand corner, that's the first half of 2020. Each bar here represents a year. There's a lot going on, but what you want to look at here is light green means there's a proportionally large number of seed deals still being done in digital health. The $9 million number in the next piece over shows that the median deal size in Series A deals has held constant over the last several years. But if you scoot your eyes right, you can see that the median deal size on late stage deals, C and D, is up significantly. And what that really means is that there are some late stage maturing companies that are attracting large amount of capital to support their growth. And that's really when we dug beneath the numbers and looked into which companies were getting financing in the first half of this year. We saw a large number, about a third of the total funding was accounted for in the mega deals that were for $100 million plus. in the first half of 2020. And you can see the list here of the deals that fit that description. And you can already see just by looking at this that there's a variety of solutions represented here, but there is a great deal of remote healthcare enablement that's attracted a large proportion of the investment dollars in the first half of 2020 alone. What I want to do now is just take another quick step back and look at the trend across different segments of investment. And so now we're starting to drill in here on how is remote monitoring, telemedicine, and some other pieces of this big digital health. There's a lot going on in digital health as a whole. Where are the dollars going, and to what extent are they going into remote and telemedical based plays? And you can see right off the bat here, it's a little bit of an eye chart, but the trend in what you're seeing is that on-demand healthcare services, online services that patients and consumers can access quickly, has gone from a relatively low ranked, the number in the box in each box represents the ranking in each year, relatively low ranked in the early years represented here in 2015, 16, fourth and fifth ranked, to number 1. That's the last couple of years for that category, but monitoring of disease has shot to the top in treatment of disease. So remote treatment solutions like Omada, Virta, other plays that are really addressing disease states and driving outcomes have gone from unranked 4, 5, 6 years ago to near the top of the investment categories that we track. That's the case for a number of categories. And I'm just showing some data here on the background that's driving, in the case of mental and behavioral health solutions, the investment interest. And this is probably pretty intuitive to folks, but when Rock Health went out and we looked at the number of searches being done for mental health services near me over the last several years versus virtual mental health services, you can see an incredible uptick, unfortunately, since the beginning of the pandemic and the shelter in place that we've all been doing. And this is the case for a number of the investment categories and segments that we're tracking. And so that's why you see, we believe, a related increase in funding for something like digital and behavioral health, remote and telemedical services. So the last thing I'll do very quickly is take a look at the investors in this segment. So who exactly is driving this investment? What I would want this audience to know is that although in the early years that Rock Health started tracking this sector when there were very few investors in the segment relative to now, the mix of investors has changed pretty dramatically, and that mix has increased in favor of repeat and veteran investors in the segment. The dark green bar here in each year that you see is the proportion of investors who have done more than one deal in the past. And so you can see in the first half of 2020, veteran investors have poured in or done a large number of deals and then poured in a large proportion of the capital. We think this signals a vote of confidence, at the very least, in the sector, that veteran investors are very likely, in this case, backing earlier investments. And because we see a large proportion of seed and Series A deals, we know that that means that there's also a vote on the future. And so the last thing I'll show you today is really an important piece of the investment picture in digital health and telemedicine is the mix of investors. Healthcare is different than non-healthcare investing in that the proportion of strategic investors, these are investors from major corporations within the industry itself, is much higher. It's about 2.5-fold higher in healthcare than non-healthcare. And you can see here that strategic investors have leaned in significantly during the COVID portion of the year. So since we saw COVID-19 hit, one would normally expect major corporations to pull back somewhat on their capital commitment in terms of long-term investing and reallocate that capital, in some cases, to day-to-day operations. It's pretty interesting, we thought, that while that may be happening in some parts of the healthcare marketplace, overall, strategic investors still account for a significant proportion of overall investing in digital health. So I hope that helps set some background context and generate some interesting thinking and dialogue. And I really appreciate the chance to address this group. Thank you very much.